Welcome to Metals Investors Forum. My name is Brian Leni. I am the editor of Junior Stock Review Premium. Today with me, I have Leif Nilsson, CEO of SURG Copper. Leif, thank you so much for presenting with me this morning. Participated in the financing this summer, brand new pick in the newsletter. I'm super excited about what you guys have on tap for the next probably year, 2 years looking ahead. Can you give us an overview of the company?
For sure. I'm also excited. It's a very pivotal time in the company's growth. So we are in the business of advancing a very big copper district in central BC. We've got a couple different projects, but our flagship and main focus is a project called Berg. We put out an initial or maiden preliminary economic assessment on it in 2023. It's a 1 billion ton deposit. That economic study outlined a $2 billion NPV. 20% IRR, both on an after-tax basis, outlined sort of producing 200 million pounds of copper equivalent over 30 years. This would make it one of Canada's biggest copper projects if it was in operation today. The metal mix is mostly copper. There's quite a significant moly credit that would make it Canada's largest moly producer by almost a factor of 10. So quite a unique positioning in the sort of emerging critical minerals topic. Quite strategic. And the financing you alluded to, we did a $10.5 million equity financing in the summer of this year. Our major shareholder, who is one of South Africa's largest diversified mining groups called ARM, they participated and increased their interest from 15% to 19.9%. And that's going to provide us adequate funding to deliver a pre-feasibility in the first half of next year.
It's excellent. One piece of news flow that really caught my eye when we had that discussion just before the financing and before I made it a pick was the metallurgical improvements you guys have made. Mm-hmm. I think a lot of retail investors kind of skim over that sort of thing and don't really realize the impact it can have if the results are significant.
Yeah.
In Berg's case, they're significant. Mm-hmm. In the modeling that I've done myself, the calculations, it makes a discernible difference between the two pictures of what the story was before. Can you take us through what happened with the metallurgy and how you've shown this improvement?
Yeah, for sure. I mean, our preliminary economic assessment was predicated on quite a lot of met work that was done in the sort of 2010 period. We saw a lot of room for improvement in it. We prepared for and executed on a very big program over the course of a year. Almost doubling the corpus of test work on the deposit. And I think we knocked it out of the park. We are demonstrating the potential to see copper recoveries increase by about 5 percentage points. And moly, which I mentioned is a very important byproduct for us, we will maybe see recovery improvements there on the order of sort of 10 percentage points plus or minus. So I think the right way for investors to think about this, recoveries go right to the top line. It's sort of, you got tons, grade, recoveries, and price is how you get to revenue. So if you see a 10 percentage point increase in recoveries, that's analogous to, 10% more tons going through the mill, 10% higher grade, or a 10% change in revenue. It's kind of the same thing. So very, very material results, and I think underscores the significance of this project in the Canadian landscape.
Absolutely. And so, from my perspective as an investor, I look at SURG. Definitely, the value is encompassed with Berg 100%. And even just looking at Berg, your discount to your underlying value is huge. Mm. But you've got another project in UTSA, a little bit lower grade. Not as much in the forefront, at least for an investor at this point. But really, I look at it as a call option on copper. Yep. That copper price goes over $5, hits $6. You've got what is multiple decades worth of copper resource right in your property package that doesn't even encompass the exploration potential, which, is not a focus, but it's still there.
Yeah.
So can you take us through that?
Yeah, I mean, the UTSA project is really the history of why SURG was involved in this district. We staked that ground from scratch, and a lot of the resources there were discovered by our company over a number of years. Berg was an acquisition that we made about 5 years ago to really expand our presence in the district, and we've obviously added a lot of value, and it's kind of taken the mantle in terms of flagship asset. But as you say, UTSA's got a big resource inventory across all categories. It's sort of approaching 500 million tons roughly. It's very interesting because it sits about 5 kilometers away from an existing mine and mill in this district that's on care and maintenance. So that obviously means there's a lot of optionality as to how that resource inventory could ultimately get developed. But putting that aside, you're right. There's a lot of resources there. There's actually a lot more gold content to that deposit than at Berg. There's certain zones there where we see gold grades in the sort of 0.2 gram per ton range, in addition to the copper around 0.2 to 0.3. So there is there's a lot of torque there for the really high gold prices that we're seeing. So it's not something that we have pushed hard on in terms of a potential standalone development scenario, like a standalone PEA. Like we did around Berg, really because of its proximity to Huckleberry. We think that's the most logical path forward for it. But investors should treat it or view it, I think, as you describe, as option value. There's a lot of drilling there. The resources are at a high degree of confidence. Most of those are measured and indicated. We've done a lot of metallurgy there to de-risk that side of it. So yeah, it's not every day you see a tier 2 project in a portfolio that is a project or a deposit of this size sitting right next to a mill that is going to be, eventually hungry for ore in the future.
Totally. It's a really nice setup, I think, especially if we get into the copper market that I think we're going to see in the next year or so. In terms of catalysts that investors can wait for, is the PFS, the PFS, is that the big one?
For sure. Yeah, that's going to be the big one. But obviously, as you build towards that, a lot of the component pieces that go into it will be newsworthy. So we're just finishing up a pretty big field program that we did up at Berg over the course of the summer. We drilled, maybe close to 20 holes across different, initiatives, whether it was resource delineation drilling, environmental geochemistry type drilling, geotechnical drilling in the infrastructure area. So not all of that stuff is going to be, sizzling type grade style press releases, but there will be a few of those. And I think, a lot of the engineering details that will come out of some of that work will be highlighted as we approach pre-feasibility. So lots of news flow, but yeah, the delivery of the PFS is absolutely the major forward-looking catalyst.
Cashed up, big catalyst in the PFS, good jurisdiction. To me, you guys have it all.
For sure. And the macro background is obviously a big part of why investors should be interested in this kind of stuff. Like copper has been very thematic for a number of years, but I think that juggernaut just keeps moving forward and gaining pace. There's been some news in the market in recent weeks with some major copper mines, having quite a lot of uncertainty around their future production. So I think that's going to underscore the importance of greenfield development opportunities with a size and significance and low risk profile that we have at SURG.
Absolutely. Thank you very much for presenting with me this week or today.
Yeah.
And I look forward to the next few months ahead.
No, it was awesome. I really appreciate the invite.